Well, meantime, the Bureau of Labor Statistics delaying the release of the January jobs report, originally scheduled for this Friday due to the partial government shutdown. The agency saying the release will be scheduled upon the resumption of government funding. Congress on Saturday failed to agree to a spending plan due to disagreements over Homeland Security funding. But a House floor vote on a funding package is expected this week. Our next guest thinks the delay is unlikely to derail the market. Julian Emanuel is Evercore ISI's Senior Managing Director. Julian, good to have you.
Good to be here.
You think the market's going to actually thrive and it's going to be driven by basically the tech trade. You're not worried about sort of the hiccups that we've seen recently in the AI trade?
Well, I will go back to December and the concerns about debt financing for the AI build-out started to surface. And unequivocally, the mood around tech is as cautious as we've seen it since any time since ChatGPT was introduced to the world. And, frankly, I never expected to be a contrarian in our view that we think tech will continue to lead the bull market higher. I love being a contrarian here. And you look at a day like today, there were lots of news items, a lot of them not so great, certainly challenging, particularly against the backdrop of gold and silver tanking as well once more. And the market traded beautifully, which you would never have said at 1 a.m. when I was awake. But, and the S&Ps were down 90 handles.
Julian, so I agree with you that the gold, silver, crypto noise is not necessarily signs that this market is falling apart. I think today's ISM, I'm just curious your view on this, because I know you've been bullish on tech. I know you think those are the horses that will lead. We know they are weighted to lead the market. But I look at this transformation in terms of what's going on. You've had trucking rates. This isn't just something that just happened. Have been at 2-year highs going into this. What do you think about this ISM? What does that mean for the broader economy?
We got an email from my transports analyst in mid-morning. These things are ripping. Incredible. And it's even more incredible when you think about the fact that we will probably find out that the cold of the last week or two is going to take a little bite out of economic activity, definitely temporary, the way things are setting up. But the backdrop is the economy is really strong.
Kevin Warsh, the market clearly, for at least a day, the market was not happy. But is that just a one-day event, or is there going to be more to the story?
No, that's a one-day one. I think you think about the psychology. What is the probability that President Trump is going to nominate someone who's hawkish when President Trump is focused on providing liquidity and getting rates lower? The balance sheet argument is likely something to be put off for another day, certainly well past the midterms.
So you said you love being a contrarian in the tech trade. Does it also apply to the subsector in tech that would be software?
Well, I think the next couple days are very key. We obviously had that one announcement after the close today. That stock seems to be trading okay. You have a bunch of names, mostly second tier, but the mood after last week's price reaction on the biggest tech giant, software giant of them all, really very cautious.
Yeah.
And these valuations are really troughing in our view. And frankly, a lot of the noise around the latest development called Multbook is something that, in fact, could be a tailwind for software companies rather than a perceived headwind.
I hear a little contrarian coming out when it comes to software, Julian.
And Microsoft.
Yeah.